Are you really sure your retirement savings are protected? Imagine working your entire life, setting aside money for the future, only to wake up one day and realize that your dollars don't stretch as far as they used to. Inflation is climbing, the markets are unpredictable, and your hard-earned savings are at risk of losing value. The traditional retirement plan that once seemed secure, your 401k or IRA, may no longer be enough to shield your wealth from economic instability. That's why so many retirees are making the smart move into physical gold. Today, I'm walking you through exactly how to roll over your IRA into gold, step by step, so you can safeguard your retirement savings before it's too late. Welcome to Golden Years Capital, where we break down complex financial strategies so you can make smarter decisions about your money. If you're looking to protect your retirement from inflation, market crashes, and economic uncertainty, this video is for you. By the end of this video, you'll know exactly how to roll over your IRA into gold, avoid costly mistakes, and ensure your wealth is shielded for the long haul. Rolling over an IRA into gold isn't just about diversification, it's about survival. Inflation has surged, with consumer prices rising 5.2% in early 2025, while core expenses like healthcare, housing, and energy have skyrocketed nearly 7% in just the past year. This means that if your savings are in traditional investments, they are losing value at an alarming rate. The Federal Reserve's struggle to curb inflation has only made the markets more unstable, and fears of a potential recession continue to loom. That's why gold remains a trusted hedge against financial crises. Central banks purchased over 1,000 tons of gold in 2023 alone, the highest level in decades, because they see what's coming. If governments and financial institutions are stockpiling gold as a hedge against uncertainty, everyday investors should be paying attention. One crucial factor that many investors overlook when considering a gold IRA rollover is how it aligns with broader macroeconomic trends. The U.S. national debt continues to skyrocket, surpassing $34 trillion in early 2025, according to the U.S. Treasury Department. Historically, periods of high national debt have led to increased money printing, which, in turn, devalues the dollar and fuels inflation. When fiat currencies weaken, gold historically strengthens as investors seek a reliable store of value. In fact, during the 2011 debt crisis, gold prices hit a then-record high of $1,900 per ounce, driven by concerns over government debt and economic instability. Now, with debt levels at unprecedented highs and the Federal Reserve's attempts to curb inflation proving less effective than hoped, gold is once again emerging as a preferred safe haven asset. If the government is forced to raise taxes or reduce benefits to manage debt, retirees relying on traditional retirement accounts could see their wealth eroded even further. This makes owning physical gold within a tax-advantaged IRA an increasingly strategic decision. The reality is that when debt becomes unsustainable, governments often resort to inflationary policies, which devalue paper assets but strengthen tangible finite resources like gold. This is why financial experts urge investors to hedge at least part of their portfolio with physical assets that maintain intrinsic value. Gold isn't just about protecting wealth, it's about ensuring that your purchasing power remains intact, regardless of economic policy shifts or government debt mismanagement. Gold has been the ultimate store of value for over 5,000 years. Unlike stocks, bonds, or even the US dollar, gold doesn't rely on government policies or market speculation to maintain its worth. It has weathered every economic collapse, hyperinflation event, and banking crisis in history. If you want to move your IRA into physical gold, there's a right way to do it, and a wrong way that could cost you thousands. The first step is making sure you qualify for a gold IRA rollover. If you have a traditional IRA, SEP IRA, simple IRA, or a 401k from a previous employer, you can roll those funds into a self-directed gold IRA without triggering taxes or penalties. If you have an active 401k with your current employer, your options may be more limited. Some employers allow in-service withdrawals, but many do not. The key is to contact your plan administrator and ask if a rollover is permitted. Once you confirm eligibility, the next step is to open a self-directed IRA. This is different from a standard IRA that you might open with a mainstream brokerage. A self-directed IRA allows you to hold alternative assets, including physical gold. But you must work with an IRS-approved custodian. Not all custodians allow gold investments, so it's critical to choose the right company. Selecting a reputable Gold IRA custodian is one of the most important steps in the process. The wrong choice could mean excessive fees, long processing times, or even risk of fraud. A good custodian will ensure a smooth transfer of funds, provide transparency on fees, and help you navigate IRS regulations. Look for a company that specializes in Gold IRAs, has a strong reputation, clear pricing structures, and top-tier security for your investments. Be wary of custodians who push overpriced gold or collect hidden commissions on your purchases. Some of the best-known Gold IRA custodians include Equity Trust, Strata Trust, and Gold Star Trust. Once your self-directed IRA is set up, you'll need to roll over your existing funds. This involves transferring money from your current IRA or 401k into your new Gold IRA. It's critical that this is done through a direct transfer, where your custodian moves the funds directly to your new account, rather than giving you a check to deposit. If you receive a check, you must redeposit it within 60 days, or the IRS may treat it as a taxable distribution. Your custodian will handle the paperwork and ensure compliance with IRS regulations so you don't face unnecessary penalties. With your account funded, the next major step is choosing the right type of gold to invest in. The IRS has strict guidelines on what types of gold can be held in a Gold IRA. You can't just buy jewelry or collectible coins. All gold must meet IRS purity standards. The most common IRS-approved gold includes American Eagle gold coins, Canadian Maple Leaf gold coins, and gold bars from approved mints like Pamp Suisse and Credit Suisse. It's essential to purchase gold through a reputable dealer who works directly with your custodian to avoid scams and excessive markups. Once your gold is purchased, it must be stored in an IRS-approved depository. You cannot keep your gold at home or in a personal safe. Doing so would violate IRS rules and could lead to taxes and penalties. The gold must be stored in a highly secure facility, such as Delaware Depository or Brinks Global Services. These depositories have top-tier security, including 24/7 surveillance, armed guards, and state-of-the-art vaulting systems, ensuring that your investment remains protected at all times. One concern some investors have is how easily they can access their gold. While gold is a long-term investment, you can liquidate your holdings when needed by working with your custodian to sell back to the market. However, unlike stocks, gold isn't as liquid, meaning the process can take a few days rather than being instantaneous. Another key consideration is the cost of maintaining a Gold IRA. Unlike traditional IRAs, Gold IRAs come with setup fees, annual storage fees, and potential transaction fees when buying or selling gold. Some custodians charge a flat annual storage fee, while others charge a percentage of your holdings. It's important to understand these costs upfront and compare them across different providers. According to Ed Moy, former U.S. Mint Director, a Gold IRA is a great option for diversification, but you have to understand the costs and storage rules before committing. This is exactly why investors need to be diligent. Gold offers strong protection against inflation and economic instability, but it's critical to choose the right custodian, avoid overpriced products, and understand the fees involved. Another often overlooked benefit of Gold IRAs is the ability to pass wealth onto future generations. Gold is a legacy asset. It doesn't degrade, erode, or lose its intrinsic value over time. While stocks and bonds can become worthless due to corporate failures or market crashes, gold remains valuable across centuries. If you're planning for multi-generational wealth, a Gold IRA can be a powerful tool in your estate planning strategy. With inflation continuing to climb and global markets facing increasing instability, rolling over your IRA into gold could be the smartest financial move you make. But the key is doing it right. Work with reputable custodians, select IRS-approved gold, and ensure that your investment strategy aligns with your long-term financial goals. If you're serious about protecting your retirement savings, I highly recommend grabbing a free Gold IRA guide. I found a company that specializes in helping everyday investors integrate physical gold into their IRAs with secure IRS-approved storage. They offer a complimentary guide that explains everything you need to know, from choosing the right gold products to avoiding unnecessary fees in the rollover process. Click the link in the description right now to claim your free Gold IRA guide. Don't wait until the next financial crisis to safeguard your retirement. Take action today.